Good morning, everyone. Dalton Grados here with Grados Capital here for a video pre-market newsletter. Haven't done one of these in a while. So as we are coming into a new week, a new month, April 1st, a new quarter, right? We are now entering into Q2. What a perfect time to do a video newsletter and start from the higher time frames and narrow it down. So, of course, I do a daily newsletter every single day delivered to your inbox for free. If you're just watching on YouTube, that's going to be the first link in the description. And you subscribe to that. There's no catch, there's no upsells, just a free newsletter delivered to your inbox every day in written form typically, but today we're doing this video. So here we go. First, I've pulled up the SPX. So we typically do our newsletter on the S&P futures because I am a futures trader. But we're going to go ahead and look at the SPX to start because as we zoom out, because the SPX is the cash index if you don't know, and as we zoom out on the higher time frame charts, the cash index remains constant, whereas the futures you have contract changes, right? So that's why it's good to also look at the cash index when you're looking at your much higher time frame charts is because it'll remain consistent like this. So let's look at the monthly. So 5-year monthly chart. And as we can see here, of course, you cannot deny the bullishness, right? But if we look here, 1, 2, 3, 4, 5 months straight up, that would indicate to me that we are due for a balance and a pullback. If we look at the last run up, what did we have? 1, 2, 3, 4, 5 months up, pulled back. 1, 2, 3, 4, 5. The last one before that looks like we had 1, 2, 3, 4, 5, 6 months up before our pullback. So that can be noted on the high time frame charts. Heading into April, May, June, heading into the summer. Summer is typically a lower volume period for the markets. So as we approach, Q2, could see some drying out in the market and some consolidation, some pullback. Maybe we can even maybe get some of this action here, just because markets by nature move from expansion to contraction. And that's what we focus on here in this newsletter, of course, is the market generated information. What are the charts telling us? Everyone loves to read the news and tries to speculate, tries to predict the tops and bottoms. And history shows if you try to do that, you're pretty much in a losing predicament because, look at this. If you're gonna try to jump in front of this train and short this before it's showing in the charts a sign of shorting or reversing, you're gonna get run over. Okay, I don't care what the news says. Look at what the market's doing. Look at what price is doing. That's ultimately what matters. If you enter shorts, the moment you enter shorts and you're in that position, the only thing that matters is the price, right? It doesn't matter what news comes out. That price going against you is going to be what you're feeling at the end of the day. So anyway, I'm going to try to get off the soapbox here. But anyway, so again, on a weekly chart, can't deny the bullishness. This is straight up. What is that, like a 60, 70 degree angle, right? If you're doing like a right angle here. But with extension comes contraction. So, we could still run up a good bit. As we're going from the higher time frame charts to the lower time frame charts, we could still clear, 5,300 on the lower time frame. But as we scale back to our monthly time frame, we see that a pullback over the next month or 2 or 3 would be warranted. That doesn't mean it's tomorrow or the next day or the next day or the next week. We could still keep trucking up as day traders, but understanding the higher time frame context, right? Hopefully that makes sense. So now we're going to shift to our ES futures. All right, as we get into these lower time frames, and not much to say here that we haven't been saying in the newsletter already. In fact, if you notice on the newsletter, I've been going into the Top Step X platform where I've drawn my lines here. So this is Top Step X, which I've been using for my futures combines, and as you see, I have them all there. But this is where I've been doing the daily newsletter with, just because it's super user friendly. Top Step X uses TradingView charts, and as you can see, we drew this wedge here on the 4-hour chart. So this is back, I guess it was maybe a week ago, a couple weeks ago. We were sort of consolidating, putting in some higher lows here and keeping the resistance up here. So we made this wedge pattern and we broke out of it. So again, zooming in on the lower time frames, on the 4-hour chart here, we broke out of this wedge. We've been consolidating above it. So this remains super bullish above the 5250s, right? 5250s, it would be the top of this wedge here. We've talked about this if you've been reading the newsletters. We've been consolidating above it and went on last week to launch up to new highs. So that remains, this area sort of remains my area of support. Now, as we break it down even further, how are we going to approach this as intraday traders? And this is the first time I'm looking at it this morning as well, so we're kind of going through this together. This 53, so let's see if we can draw a horizontal line here. This area, 53.15 area, is going to be my first area of support. It looks like we're gapping up from the Sunday open. Yesterday's open is gapping up. Of course, we were closed last Friday for Good Friday, so we have a gap to fill on the intraday time frames, right? So if you're day trading, we have this gap to fill from Friday's close. So I'm gonna put, or Thursday's close rather. So I'm gonna put another line here. This is our close from last week. This is our open from Sunday. My bet is that this gap will fill right down near 5,300. So 5,300s is going to be your big area of support. If and when we fill this gap, we're going to monitor for how much or little the gap fills. Right? So if the gap fills and bounces from there, that's bullish. If the gap gap fills partially, so I'm talking about this gap between these two lines I just drew, the gap fills partially and then continues up, that's very bullish. If the gap never fills, that's the most bullish. And if the gap fills and we continue below 5,300, that's going to be the most bearish. That's going to signal to me, if we get a gap fill and a continuation and an acceleration below 5,300, that's going to signal to me that our higher time frame pullback that we just went over on the monthly chart is underway. Right? That's going to signal to me that the bulls are running out of gas. If we fall below this 5,300 area, if we continue to accelerate and we come down below our wedge here that we talked about on the 4-hour chart and into the 5250s, that would be my next support, 5250s. Below that, that means our higher time frame pullback. Again, looking back on the monthly and weekly charts, that high time frame pullback is going to be commencing. So that's what I would look for. All right. So those are the main areas that I would look for coming into today. So we started with the higher time frames. We know our high time frame context, and then we broke it down to low time frames for an intraday play. Um, of course, today's Monday. Typically, Mondays I like to let the market play out in the morning, see what it wants to do. But on a low time frame, expecting this gap to fill. On a high time frame, could continue up a little bit, but ultimately, from a monthly chart, zooming back far enough, we are expecting some sort of consolidation or pullback in the next coming weeks and months. All right. So hopefully that was helpful. Again, subscribe to the newsletter if you haven't already, and I'll be in your inbox tomorrow and every day. So I'll see you guys then.